RBC Capital's Tom Narayan has a buy rating, price target of 298. Joins us right here at Post 9. Not going your way today, Tom. Why do you feel like things are going to turn for this company?
Yeah, I mean, look, this company is in between two waves, is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know very well. He's looking at things from a years, if not decades, perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away, potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today. If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not even enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just an auto company.
Right. You can sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where this stock will be a year from now, not next week. So, yeah, you're right. And the other issue is, while I think they'll hit the volume target that the sell side has, I don't think it's that aggressive, actually, for 24. I think that'll come from price cutting, which impacts profitability, and that's what everybody worries about. So, you're right. Near term, definitely challenging. Elon says it all the time, right? But again, you got to have a broader view of it. And I don't know about you, I can never time this thing, right? So it pops when it pops, right? Somebody like me writes a big report and everybody gets excited, and that's the narrative that changes things. Near term, though, I just don't know what the near-term catalyst is from a data point perspective that re-rates the stock.
What percentage of your valuation model is the core auto business?
10%.
10%?
Yes.
And the rest is energy?
Autonomy and energy.
AI,
mostly autonomy.
Mostly autonomy.
Yeah.
And what about AI robotics? Or
I don't include robotics in there at all.
Because
right.
Because of the risk he might do it elsewhere, or something else?
We just don't have any evidence of a product that's out there in the market making money. Energy storage is already making a bunch of money for them. And autonomy, they do have an FSD product, which is really compelling. And they're charging $200 a month for this product.
How about China risk? If, in fact, things really, I mean, TikTok's just one example of tariffs. What may happen a year or two from now?
Yeah, no doubt. It's definitely a risk right now. We saw the Q1 numbers. I think those have to come down on deliveries. A lot of that is China New Year. But look, structurally, it's 40% of their volumes. But at the end of the day, their product that they sell, they do have better profitability than any other car company, maybe besides BYD, right? They should do well long term. And again, auto business, 10% of my valuation, right? It's really an autonomy business and an energy storage business.
Let's do Tesla. Little change, stuck right at $175, 180, basically, over and over.
Yeah, there was some China data out. They sold 30,141 units in February in China. Overall, they sold over 60,000, but they exported some of those Teslas out of China. They're lagging. That's only 7% of the market share. BYD sold about 28%. So they continue to lose that battle in the EV space. In the last 3 months of 2023, Oliver, sales were only up 3%. We're not used to those numbers. We're expecting bigger numbers. They're expected to sell 2.1 million vehicles this year. So this thing's ran into some problems along with what Musk has on the Twitter side or X side also. Stock's only up 2% from year ago levels, down 28% so far in 2024. So this thing's been under pressure, but I think somebody also taken a stance here that we're going to see some gains here over the next month or 5 weeks.
Those were some intense discussions on Tesla's future. If you're a Tesla investor or considering investing in the electric vehicle giant, you're going to want to pay close attention. Welcome back to InvestMinder, where we break down the latest market trends and investment opportunities. If you're new here, be sure to subscribe and hit that notification bell to stay up to date with our latest investing videos. Before we dive in, let's get the disclaimer out of the way. We are not professional financial advisors, and this content is for educational and entertainment purposes only. Always do your own research and consult with licensed professionals before making any investment decisions. Now let's talk about Tesla. The company's stock has been on a roller coaster ride lately, and analysts seem divided on its future prospects. While some believe Tesla's affordable car model will be a game changer, others are skeptical about the company's ability to maintain its momentum in the face of increasing competition and changing market dynamics. But that's not all. According to the experts we just heard from, Tesla's real value may lie in its energy storage and autonomous driving technologies. These cutting-edge innovations could potentially revolutionize entire industries and open up trillion-dollar opportunities for the company. So, what does this mean for investors? Is Tesla still a solid long-term investment, or should you cash out while you can? In this video, we'll break down the key points from the experts, analyze Tesla's current situation, and explore what the future might hold for this pioneering electric vehicle company. Buckle up, because it's going to be an electrifying ride. Let's start by addressing the elephant in the room, Tesla's recent stock performance. As the analysts pointed out, the company's shares have been struggling, down 28% so far in 2024 and barely up 2% from a year ago. This lackluster performance can be attributed to a combination of factors, including concerns over slowing EV sales growth, increasing competition from rivals like BYD, and the ongoing Twitter saga involving Elon Musk. However, it's important to note that Tesla's stock has historically been subject to wild swings, and the company has proven time and time again that it can defy naysayers and bounce back stronger than ever. After all, this is the company that revolutionized the automotive industry and made electric vehicles cool. One of the key points raised by the experts is that Tesla's true value lies not in its core auto business, but rather in its cutting-edge technologies, such as energy storage and autonomous driving. According to RBC Capital's Tom Narayan, these segments account for a whopping 90% of his valuation model for the company. Energy storage in particular is an area where Tesla has a significant head start over its competitors. With a 15% market share and higher profitability than the automotive business, this segment could prove to be a goldmine for the company in the coming years. As the world transitions towards renewable energy sources, the demand for efficient and cost-effective energy storage solutions is set to skyrocket, and Tesla is well positioned to capitalize on this trend. But it's the company's autonomous driving technology that really has analysts and investors alike buzzing with excitement. According to Narayan, Tesla's full self-driving FSD system is the most amazing product I've used since the iPhone. With the highly anticipated version 12 expected to launch this year, Tesla could see a significant increase in the attach rate for this game-changing technology. Now, it's important to acknowledge that autonomous driving is still a controversial and relatively unproven technology, with concerns over safety and regulatory hurdles. However, if Tesla can successfully navigate these challenges and bring a reliable and affordable autonomous driving solution to the mass market, the potential upside could be astronomical. But let's not forget about the risks. China, which accounts for a staggering 40% of Tesla's sales volume, remains a significant uncertainty. With ongoing trade tensions and the potential for escalating tariffs, the company's growth in this crucial market could be hampered. Furthermore, the increasing competition from domestic Chinese EV manufacturers like BYD, which currently holds a 28% market share in China compared to Tesla's 7%, is a cause for concern. While the risks and challenges facing Tesla are significant, it's important to remember that the company has consistently defied expectations and emerged stronger from adversity time and time again. Elon Musk's visionary leadership and the company's unwavering commitment to innovation have been key drivers of its success thus far. One area where Tesla has consistently excelled is in its ability to capture the imagination of consumers and cultivate a fervent base of loyal supporters. The company's sleek and futuristic designs, coupled with its cutting-edge technology, have made its vehicles highly coveted status symbols. This brand appeal and cult-like following have helped Tesla weather many storms and could prove invaluable as the company navigates the challenges ahead. Moreover, Tesla's vertically integrated business model, which encompasses everything from battery production to software development, gives the company a significant advantage over its competitors. By controlling every aspect of the production process, Tesla can quickly adapt to changing market conditions, streamline operations, and maintain a high level of quality control. Another potential game-changer for Tesla is the highly anticipated affordable car model that analysts believe could be the company's next major catalyst. While details on this vehicle remain scarce, the prospect of a truly affordable electric car from Tesla could open up an entirely new market segment and accelerate the adoption of EVs among mainstream consumers. However, it's important to note that Tesla's success is not solely dependent on its automotive business. As mentioned earlier, the company's energy storage and autonomous driving technologies could hold the key to unlocking even greater long-term value. On the energy storage front, Tesla's Powerwall and Megapack products have already garnered significant interest from both residential and commercial customers. As the world continues its transition towards renewable energy sources, the demand for efficient and cost-effective energy storage solutions will only grow, positioning Tesla as a major player in this burgeoning industry. Autonomous driving, on the other hand, has the potential to disrupt not just the automotive industry but also sectors such as logistics, transportation, and even ride-sharing services. If Tesla can successfully bring a reliable and affordable autonomous driving system to market, the company could potentially capture a significant share of these multi-trillion-dollar markets. Of course, realizing these ambitious goals will not be without its challenges. Regulatory hurdles, technological roadblocks, and intense competition from deep-pocketed rivals like Google, Apple, and traditional automakers pose significant risks. However, Tesla's track record of innovation and its willingness to take calculated risks could give the company a crucial edge in the race to dominate these emerging technologies. As we've discussed, Tesla's future success hinges on its ability to execute on multiple fronts, maintaining its dominance in the electric vehicle market, commercializing its cutting-edge energy storage and autonomous driving technologies, and navigating the geopolitical and regulatory challenges that come with operating on a global scale. However, one factor that cannot be overlooked is the company's financial performance and ability to generate sustainable profitability. While Tesla has made significant strides in recent years, achieving consistent profitability has been a challenge, with the company often relying on regulatory credits and one-time items to boost its bottom line. Going forward, Tesla will need to demonstrate that it can generate consistent and meaningful profits from its core operations, particularly as the novelty of electric vehicles wears off and competition in the space intensifies. This will require a delicate balancing act between maintaining its premium brand positioning and pricing while also making its products more accessible to mainstream consumers. One potential solution could be to follow the lead of traditional automakers and introduce a wider range of models and trim levels, catering to different price points and consumer preferences. This strategy could help Tesla capture a larger share of the growing EV market while maintaining its premium brand image for its higher-end offerings. Another area where Tesla could potentially unlock significant value is through its software and data capabilities. As more and more of its vehicles hit the road, the company will have access to an unprecedented amount of real-world data on driving behaviors, traffic patterns, and vehicle performance. This data could prove invaluable in refining and improving Tesla's autonomous driving and energy management systems, as well as opening up new revenue streams through data monetization and software-as-a-service offerings. Furthermore, Tesla's investment in cutting-edge technologies such as artificial intelligence and machine learning could pay dividends in the long run. By leveraging these technologies, the company could potentially streamline its manufacturing processes, optimize its supply chain, and even create entirely new products and services. However, it's important to note that Tesla's success in these ambitious endeavors is far from guaranteed. The company faces intense competition from established tech giants like Google and Apple, as well as traditional automakers who are rapidly ramping up their own electric vehicle and autonomous driving initiatives. To truly cement its position as a leader in these emerging fields, Tesla will need to continue pushing the boundaries of innovation while also demonstrating a level of operational excellence and financial discipline that has sometimes been lacking in the past. Another critical factor that could shape Tesla's future trajectory is the company's ability to navigate the complex geopolitical landscape and maintain a strong foothold in key markets around the world. As we've seen, China represents a significant portion of Tesla's sales volume, accounting for a staggering 40% of its total deliveries. However, the ongoing trade tensions between the United States and China, coupled with the rise of domestic Chinese EV manufacturers like BYD, pose a significant threat to Tesla's dominance in this crucial market. A further escalation of tariffs or other protectionist measures could severely hamper the company's growth prospects in China, forcing it to either absorb higher costs or risk pricing itself out of the market. To mitigate this risk, Tesla may need to explore alternative manufacturing and supply chain strategies, potentially shifting more production to other regions or localizing its operations in key markets. This could involve establishing additional gigafactories or partnering with local manufacturers to reduce its reliance on any single market or supplier. At the same time, Tesla must also contend with the rapidly evolving regulatory landscape surrounding electric vehicles, autonomous driving, and emissions standards. While some governments have been proactive in promoting the adoption of clean energy technologies, others have been slower to embrace these changes, creating a patchwork of regulations that can be challenging for a global company like Tesla to navigate. To succeed in this complex environment, Tesla will need to maintain a strong lobbying presence and work closely with policymakers to shape regulations in a way that is conducive to its long-term goals. This could involve advocating for more favorable incentives for electric vehicle adoption, pushing for standardized autonomous driving regulations, or even influencing the development of new emissions standards. Failure to effectively engage with regulators and policymakers could result in Tesla facing significant headwinds in key markets, potentially stifling its growth and giving competitors an advantage. Despite these challenges, Tesla's unique position as a pioneer in the electric vehicle and clean energy space could also present significant opportunities. As more governments around the world embrace ambitious climate goals and seek to reduce their reliance on fossil fuels, Tesla's innovative technologies could become increasingly attractive and sought after. By positioning itself as a leader in sustainable transportation and energy solutions, Tesla could potentially forge strategic partnerships with governments, utilities, and other organizations committed to fighting climate change. These collaborations could open up new avenues for growth, such as large-scale energy storage projects, smart grid initiatives, or even joint ventures to accelerate the deployment of electric vehicle infrastructure. As we come to the end of our analysis, one thing is abundantly clear: Tesla's future is anything but certain. The company faces a complex web of challenges, ranging from intensifying competition and geopolitical tensions to regulatory hurdles and the need to consistently deliver on its ambitious goals. However, what sets Tesla apart is its unwavering commitment to innovation, its visionary leadership, and its ability to capture the imagination of consumers and investors alike. Time and again, the company has defied the naysayers and emerged stronger from adversity, proving that it is more than just a car company. It is a symbol of the future of transportation and energy. As we look ahead, the success or failure of Tesla will likely hinge on its ability to execute on multiple fronts simultaneously. From bringing truly affordable electric vehicles to the masses and commercializing its cutting-edge energy storage and autonomous driving technologies, to navigating the complex geopolitical landscape and forging strategic partnerships, the company faces a daunting task. Yet, if history is any indication, it would be foolish to count Tesla out. With Elon Musk at the helm and a passionate team of innovators and engineers, the company has the potential to not only disrupt industries but to shape the very future of how we live, work, and move. So, as investors and observers, all we can do is buckle up and enjoy the ride. For with Tesla, the only thing that seems certain is that the unexpected should be expected. That's all for now, folks. Be sure to like, share, and subscribe to InvestMinder for more insightful analysis on the latest market trends and investment opportunities. Until next time.
Thanks again for watching, and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.